The key thing for us is to really identify what specific thing or reason that there is to get into a trade. Clear price levels and volume is super critical.
How do you differentiate that?
I think first is going to be
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value.
Welcome back, everybody, to Be the Trader. Today is a fantastic day because we're here at SMB Capital's office in Manhattan, New York City, and I got my man Max here, who, if you don't remember who Max is, he was on the show a couple of years back when he was rising star in the SMB, and now he's been killing it. And I really want to dive into an important topic with him. It's generating many ideas every morning and the ability to crush a few of them and avoid many of them. So, Max, welcome to the show, brother.
thanks, man.
Absolutely, man. So, really, how many ideas would you say you generate on a daily basis pre-market before you start trading?
Sure. So I would say that I'm on call probably around 8:30 or something. If it's a really active day, then probably 7 or 7:30. And we're just like nonstop going through like potential breakouts, breakdowns, small cap ideas, large caps. That we're going through options trades. And it really is just kind of getting the juices flowing. But the key thing for us is to really identify what specific thing or reason that there is to get into a trade, right? So for us, our style for the most part is more so momentum trading.
Okay.
And especially on the large cap side, using options for that. So for us, clear price levels and volume is super critical, right? So identify exactly how we want a chart to form and also what exactly we want to see on the volume side is super critical, because especially for like momentum setups, there are many times where you can just get into bad trades, and being ultra selective for those and grading those trades properly is critical.
How do you differentiate that? Because if you're scanning through all these different ideas,
Yeah.
and you specify what you want to see, if you don't see exactly that, you won't take it, or like, how does that work?
So there's grades and there's scaling into trades. So for example, if let's say we think there's going to be a breakout, right? We can absolutely get into a starter size and then build throughout the trading day for that bigger idea, right? And really having kind of exponential trade size allows us to not really take too bad of hits on starter trades and really preserving our capital for those best trades. Some key characteristics would be where the stock is in the daily. What kind of a market is it, right? If you were to look at momentum style trades last year, there were a ton high quality setups, right? I mean, the market was breaking out, it was out of range, and there was constantly just new themes, right? And this year it's been a lot different, right? I mean, this has been a more news driven year, and your classic momentum setups or swing setups, they've not been there, right? So trying to identify which characteristics put that trade into the A category instead of, let's say, certain characteristics that could be like, okay, this is worth starter size, but it's not worth that much past that.
So when you mentioned earlier, like depending on if it's an A quality or not the best,
Yeah.
you'll differentiate your sizing.
Yes.
Could you explain the characteristic difference between when you will go, bigger size versus just starter size?
Sure. So I think first is going to be where the stock is on the daily. Is it a mid-range or is it a fresh breakout? Like think back to like last year with like semis. You were constantly getting new semis, fresh all-time highs. These are stocks where there is likely to be plenty of demand, right? And really strong RVOL, right? And typically you get a lot better RVOL when you are out of range, right? Because you have a lot more commitment to the move. This is both on the upside and downside, right? So really honing in on when that incredible RVOL and also out of range move starts is, for me, a much higher quality trade then potentially some short time frame, mid-range daily breakout or breakdown, that it could work and might have a good risk reward, but the odds of success could be a 50-50 there.
I want to take a couple of seconds to say thank you to our sponsor, Cobra Trading. Cobra Trading is the go-to broker for short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. And Forbes Advisor did an exhaustive research on day trading brokers. And Cobra Trading was the only broker awarded in 2 categories, one of them being customer service. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. Look, I've experienced many different brokers, and it's why I choose to use them every single day, and I'm proud to have them as our sponsor. Sign up now by using the link below, and Cobra Trading will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. Now let's get back to the show.
That's a good point, because so you're basically, for those who are listening, and just make sure to clarify, you're saying out of range is like key daily level, finally breaks out of a range, it's out of that range, right?
Yes.
Versus it's in between a key support and key resistance.
Yeah.
Correct? Okay. So, and if you will, is there like a certain thing that you ask yourself besides just the in range and outer range that eliminates just I'm not trading, period? Like that helps you just say, I'm not trading these, even though I have 10 ideas, I'm trading this one idea only. These other 9, they're just not worth it anymore.
So I would say 1 is the actual risk reward of the entry. Okay. 2 is stock specific characteristics, right? There are certain stocks that are just good traders, and then there are certain stocks that are bad traders, where even the best like momentum strategy or a chart look will barely work, or it's super inconsistent. You know, think about good momentum traders, or just really top quality ideas from last year. Like you can think of NVIDIA, Tesla, names that had really clean moves. RVOL was there, and also is super active on the option side. You know, most of these ideas, or these bigger ideas that we are putting on, at least for my team, we are structuring through options, right? So what is the risk reward of that? Also, how spready are the options? What kind of volume is done? What is the characteristic of how the options move? Like, for example, on those more momentum names, when you get a clear break or a clear directional break, the implied vol on the option really works in your favor as the trade is working. And that is specific to those kind of style names. So it inherently increases the risk reward, because you can actually capture the delta move, but also are really gaining as well from the implied vol working in your favor. But then there are certain stocks where you won't really see that same benefit, because they're just not as popular, or they're just not the same kind of, a style name. Like, for example, if you were to get a lower RVOL breakout on a Amazon or Apple, those names don't have that same kind of sexy intraday characteristic where you get this huge options flow, or at least not typically. Whereas NVIDIA and Tesla from last year, anytime that those names had like a clear momentum break with true volume acceleration, you made on the delta side, but the implied vol spiked incredibly with you, to the point where it really changed the whole risk reward of the trade. And you can factor that in to a trade thesis and what you want to risk.
What would you say is like in a standard week?
Yeah.
Is it often that, do you expect to see at least one A+ up every day, or is it like, how is it like? Because I know new traders, we get perceptions of seeing great traders, and you're like, man, this guy's nailing A+ ups every single day. Why can't I find A+ ups? Yeah. Is that what it's really like for you, or is it like some weeks there's like no really A+ ups, some weeks there's just 3? Like, how is it like in your world?
I think that things really kind of come in waves. I would say last year there were probably a lot more frequent A trades. Whereas, for example, like this year, I feel you've had like a week or 2 of great trading, and then it's just gone the complete opposite way, at least for my style stuff. I mean, April, the first 2 weeks was basically the greatest trading environment that we've seen in a very long time. right? The Qs were doing 200 million shares in a day, and 5 days later, they're doing 40 million. It's a complete shift, right? To the point where, the grade of trades in that 5-10 day period was so much higher, and then it basically went almost instantly to just doing starter risk trades. And really being able to flip the switch in terms of seeing when that environment shift happens. I mean, like, that is something that I did poorly earlier on in my career, where there was a ton of fast-paced trading, and then suddenly all of those like momentum style characteristics died, but I kept doing the same trades. All right, so really honing in on what characteristics work for your best trades, and if they're not there, quickly stopping it, so that way that doesn't really impact your long-term process.
So what I'm curious about though is when you mentioned when it shifts from, for example, what you mentioned earlier, let's just say it's the Qs, it's 200 million volume every day, and then all of a sudden it's 40 million. It's a huge dynamic shift.
Yeah.
And you said you'll downsize and you'll take a lot more starters. When that's happening, are you taking starters because you're in more so wanting to keep an eye on it just in case it does set up to an A, or is it more likely like, is it necessary? Like the thought I'm thinking in my head is you want to move the needle. So if you want to move your needle and in terms of your equity account and grow, are those starters on those slow days even worth your time? Like, or should you, like, why even take them? So I'm just curious what your thought process is behind even taking the trade when it's those slow days.
Well, for the most part, on the starter side, those would be more on the intraday basis and seeing if that could develop into some bigger idea. I would say that, like, for example, the frequency of trades for me on the overnight significantly decreased, and I'm basically not putting on starters anywhere like nearly as like frequently, right? I mean, like when like the market is super in play, there's a bunch of different strategies, some directional, and then like some not. I mean, we are constantly having idea generation. It's just a question as to what like level that is, right? So on the intraday basis, are we going over our PM prep and then just kind of sitting there like throughout the day through a low VIX day or something that's like not super active, or are we there actively trying to build trades and get into A trades and ready for those astronomical opportunities? Like, for example, during like the second week of April, we were nonstop speaking about what if this comes out, what are you going to buy? If this comes out, do we want to be in this stock or that stock or this option or that option, right? There's definitely a greater level of intensity in those moments. The one thing as well that I feel other people might think differently is that when things really slow down, I try to also not expend as much mental energy, because if you're fully 100% every single day of the year, you're going to burn out. Like, for example, when things were crazy, I would not work out midday. But now, if things are slow, being at the desk in what is for me a boring market for 8 hours straight is going to make me basically hate this job, right? So I would rather miss, let's say, those small opportunities and keep my head in a good space, right? So that way, once those next A trades come, I can be fully there and mentally ready to go full steam, at those trades, right? Some people feel differently. Some people feel like they need to be, at the desk in the zone nonstop, because if they waver, it's possible that they don't kind of like snap back quick enough. But I would definitely say, just personally, one of my strengths is that once I see a really good trade, I can kind of snap back into it and really feel as though that I can put on the right risk.
Well, look, Max, I know people are going to have more questions, and you mentioned PM prep, which is pre-market prep.
Yeah.
And you do that quite often with a team of yours.
Yeah.
That are focused on momentum trading styles with options, as you mentioned. And I know you also do that online through something that SMB offers. Do you mind sharing that real quick on how people can learn more about that?
Sure. So part of SMB's Inside Access, I do on Fridays a options webinar where I go over basically the top 2 or 3 trades from the week on the option side and specifically on the 0 DTE side. And then I also just kind of discuss what are the major themes, as well as kind of just the overall atmosphere of the options kind of trading world for that week.
Perfect. Well, look, we'll have links down below so that way you can see more about Max. And again, Max, thanks for being here, brother.
Absolutely, man. Thanks for having me.
Absolutely.
Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.